Good morning, guys. Good morning. I hope you all are doing well. I hope you can hear me very nicely. So, I'm happy to be here today with you. And today I will be doing an analysis on ES, a weekly analysis on ES. So, um, I hope it can be useful for you guys. And um, and so I'm planning to do a full weekly analysis, and then I will be doing a daily analysis, so you can know exactly what's going on in the market and what to expect during this week. So let's start right away. Um, so we are going directly on the chart. So this is the daily chart, and then let's start with the weekly chart. Okay, let's just switch to this chart, much better. Oh, sorry. I'm going to leave the Max Maserati model, and I'm going to take this out, and yeah. So basically what we're going to do today, so let's start with the monthly. So as we can see, I'm just going to leave the Max Maserati model indicator activated. So normally, this is the way I start my live. So I know most of you now are sleeping, and most of you might be like preparing to go to work. And but for me in London, it's 11:27, and that's 11:27, so it's 10:27, and in New York, in the US, it's 5:27. So most of you are sleeping, and you're going to work or getting ready to go to work. So I decided to do a daily analysis. Um, I will try my best to do it on a daily basis, and I hope it can serve you. So what we're going to do. So I don't. Let me check the camera if it's much better here. So what are we going to do now? So as we can see the monthly chart. We can see that the monthly chart we are we are we are bullish. Okay, on the monthly we are bullish, right? And and I hope you can see me, guys. So on the monthly chart we are bullish, and let's have a look. So this market has been going up and up and up and up, and then so this is the model. And on 3 months, let's go back to yearly chart. So the yearly is fully bullish. And then if we check on 6 months, we have a bullish body close, and the candle just took the high of the 6 months candle. Okay. No, this is NQ. Let's just do the analysis on NQ. Okay, let's do, since I talk about ES, let's do it on ES. But I know most of you like NQ, so one day I'll be doing a full analysis on on um on NQ for you guys. Okay, okay, here we go. So as you can see here, 6 months is fully bullish. Okay, and the yearly is fully bullish. There's no doubt about it. And if you look on the 3 months basis, we are completely bullish as well. And then we had a bullish body close. For the one who don't know the bullish body close, bearish body close, you can still go to my free class, and then so you can just watch the free classes I have available. And so um so as you can see, I have a lot of drawings. Um, but so what are we going to do? And then like 3 months, and then so let's go on the monthly. On the monthly, the previous months, which was September was we had the bullish body close, and then the current month and October, it's bullish. It's October already delivered on top of the all high, because this used to be a all-time high and all-time high. Now, so it become our new all-time high. But now, since the candle hasn't closed, so on the monthly, this is still our new all-time high on the monthly, right? So let's just mark it as our monthly. So it was our monthly drawn liquidity. So I mark it prior to before the candle took it. So let me just delete it so I can do the analysis for you guys. Okay. Uh, and then as we can see on the monthly, we still bullish body close. So now we have a new all-time high. Okay, this is our newest all-time high, right? This is our newest all-time high on the monthly. Let's say this is our newest all-time high, newest all-time high ATH, right? So let's make this like around 14, and then as we going further, we can see that we we are now this our old there's our newest ATH or newest all-time high. And then when we go on the weekly, the previous week close what? Bullish body close. Okay, the previous week close bullish body close. As we can see that this candle here, it came all the way, went all the way down here and closed bullish body close for the week. Okay, so what we're expecting now, we're expecting for this week, the newest all-time high is our target for the week. So we'll call it weekly target, weekly target. Okay, this is our weekly target, or our drawn liquidity for the week. Okay, let's just say this is our weekly target. So as you know, so when the candle opened, this is a bullish body close candle, right? So the candle opened, and then the buyers could push the price all the way up here to the all-time high, right? And then since they could push price up here, but the sellers came into the market here from the high to the close. They came into the market and pushed a bit down. Okay, so as you know, so the sellers, if you've been very like familiar to my system, you know, in between the close and between the high and the close of every single candle, you will find the sellers. Okay, the sellers will be here to do what? To defend the position, to trying to push this price down. So as you can see, so the buyers, what will they do? They will just attack to fill out the objectives, which is like, since we have a bullish body close, we're expecting price to take the high of the newest ATH, which is our weekly target as well. Okay, so the sellers and buyers will be fighting inside of this box here, because this is where we find the majority of our sellers, and because the buyers try to push up price up, and then the sellers, okay, and the sellers, what they do is like they will be fighting with the buyers here, because they were able to push price to close a little bit lower when this candle closed. So this is the weekly candle. So this is our weekly target. Okay, so normally, you know, what I like to do, I like to go back and check where is my market switch change, where is my internal block, my MMM external block. As we can see here at this level here, we can see that we had our MMM external block. So the market went all the way up and create a market switch change here. Okay, but if we go all the way down on the weekly, basically we don't really need to, but we want to have a very clear market switch change. So we can call this is our clearest market switch change. Okay, with a bullish body close. So this is our MMM external block on the weekly. But let's not mark it, because the weekly, you know, it's huge. We are not really investors, and we don't do long term. We don't hold a trade for long term. So what we're looking at, we'll be looking mostly on the daily. So, but at least we know that the weekly chart is bullish. So we are looking for buyers are buying like crazy. The economy is good. People are very confident they are buying. But bear in mind, when the market is very, very, very bullish like that, and buyers are pulling a lot of money inside of the market, we might expect them to take profit at a certain point. Okay, so our daily candle, it was a bullish body close. So since it was a bullish body close on the weekly, our weekly candle, previous week candle was a bullish body close. So we're expecting this week to take the high and then and to respect this level here. So this is the weekly low. So we are going to call this our weekly low. Okay, weekly low. So basically, if this market is looking to take this high early today, so we might expect the sellers to resist and trying to push price down, okay, because they need to take profit. Or if the buyers are strong enough, they will you will have new buyers coming in. They will push price even higher up. But as you can see, this candle is very strong, and since this candle didn't really retrace back inside of the weekly candle, okay, so normally we would love to see that this candle, this weak candle, to retrace back within the 50% of the candle into this candle, okay. But as you can see, the buyers are so strong, and then they are pushing price up, okay. They are pushing price up, okay. So they keep pushing price up. So we don't know, we don't really know where they want to bring price. But what we can see is that they are trying to push price up very early on Monday, which means the buyer are either very strong to keep pushing price up, and if they can't push price up, we will see this market falling off during this week. Okay, so this is my expectation. Okay, so buyers, they did not really retracing back inside of the weekly candle. Okay, and then if they were to retrace back inside of the weekly candle, we highly expect an interaction and our bouncing point will be the new ATH that was created. Okay, so okay, the market took this from this old ATH, the market went up, created this new all-time high, and then we expect this weak candle to retrace back inside of the this level, which is 5830.50, and bounce from it. However, we saw that the buyers are so strong, they didn't even let the sellers they didn't even retrace back down to push up. Okay, they didn't even trace back down to push up, right? And then, but there's one thing you need to realize as well. You see, as you know that every single candle, when this candle open, next candle should open to when this candle close, the next candle should open exactly at the same level. What we can see here, this candle open lower, which means that the sellers try to push this price down, which means that we have a lot of sellers inside of the market because they were able to push price down. So this price did not open. Okay, this candle did not open at the same closing level of the previous week, which is telling us that the sellers are inside of the market. So we might expect that we might expect that they might take the all-time high and push price down, because this little opening here, the opening of this week, since the opening of this week is telling us that the sellers tried to push price down a little bit, and then they make the market open lower than the previous close, which means I would say there's a negative uh, aspect of price, which is like we were expecting price to open at the same level at the previous close. It's not, and then it's negative, which means it's open lower. So the close of the previous candle is higher than the open of the new candle, which means the sellers are quite strong. However, the buyer took over, push price up. So what I'm expecting for this week, that price will come and take the high, okay? Probably today, take this high, and then after that, push and create the all-time high and try to push down, okay? So on the daily, let's go on the daily. On the daily, what we can see, so this is our newest all-time high, and then the previous day close what? Bullish body close. Okay, let's just mark it out, and then let's delete this. Okay, we're just going to mark out. So this is our day. Since we have a bullish body close, now we're going to define our MMM bias. Okay, our MMM bias. So we have a bullish body close. Since we have a bullish body close, we'll be marking this level, the yesterday low, and then we will be marking this level, the yesterday low, and then when did price push? So, and then we'll be marking the since price open here, and then so this candle, the close of this candle, okay, the close of this candle was higher than the open, which means we have a bullish body close. So this level here is our level of interest. Okay, it's our level of interest. So we'll be marking in this where we can consider that the market made a swing success. Okay. Okay, so let me just take it from the template. Okay, so yesterday swing success. So we had a yesterday swing success. Okay, so price close bullish, and then even we had a lot of sellers to this on top of this candle. Okay, so the buyers could push price higher up. Okay, they could push price higher up, and then at the opening of this candle, as we can see, price was supposed to open at the same level of the close, but it didn't. It opened lower, which is telling us that price might highly likely push down today. So once this buyer distribute to this level on top of the newest ATH, so I'm highly expecting that price during this week went up, take this liquidity here. If there's no new buyer coming in to push price are higher, so and then if we see a closing of price below the newest ATH today, so tomorrow we might be expecting price to retrace back and then push down to take this liquidity down. But let's see how the buyers will react today once they took this level. Okay. So and then so there's our newest ATH, and then so what do we have? What we can see, and then market. What did the market did here? The market create a market switch change here with a bullish body close, which means we have an MMM here. From this here to here, we have an MMM external block. Okay, MMM external block CDL. Okay, so let's mark it out. Okay, we have our MMM block, external block CDL, and which is the weekly low as well. And then so let's mark it so we have an MMM external block CDL. Okay, on the daily. So which means this price is very bullish. Okay, however, the buyers were supposed to open this price at the same level of the previous close of yesterday, but they could not, which means we highly likely can based on this open here, we can anticipate that price take this high today, push a little bit higher, and if the buyers want to start taking profit, or if they start taking profit, so we will see that there will be a kind of rush to take profit. Once they start taking profit, and it will be like a free fall. So where we might expect price to bounce from? First, on the yesterday swing success, that's the first place we expect a bounce on. For example, like on the broader perspective, we expect a bounce from here. We expect a bounce from this level 58.30.00, and we expect a bounce from 58.36.00. And if the market took the yesterday low and then come back inside of this unfair pricing gap or fair value gap, like you like to call it, and then we expect bounce from this level as well. But however, since we have an MMM external block CDL, and then the market seems to change to this level of a bullish body close, so we're expecting price to react from the MMM block as well, but we don't know how far the market will react from the MMM block. And on the lower time frame, we can see we have unfair pricing gap on 4-hour here, another unfair pricing gap on the 4-hour here, which means there's plenty of buyers here. Okay, and then the sellers, if they were to push price down, they will be looking to this level here to exchange the amount of contract they are selling. Okay, if the seller starts selling from this level here, we might expect that price come all the way down here. Okay, and if price were to violate this MMM external block, which is the weekly low, which is 5725.50 on ES. So if price were to close below it, and then on the weekly as well, let's not forget that we have unfilled portion on the weekly. The unfilled portion is just like an unfair pricing gap or fair value gap, that the price come to this level and leave this little portion unfilled. Okay, so if the sellers were strong enough, or the buyers were like to start taking profit from this bullish market, so we might expect price to come all the way down here. Okay, all the way down here. And but don't remember that price is not never go on a straight line, mostly if you go on lower time frame. So we might expect price to bounce from 5836.25, from 5828.75, and from all these levels, like where we have unfair pricing gap. Okay, so if price were to violate 57.25 and 0.25 and close below it with bullish body close, so we might expect price to start going down, because people will start taking profit and new sellers will come in to take advantage of the market. But if this bullish candle push up, today's candle, like the way I see this candle, if this candle is strong, even the sellers try to push to even the sellers open the price down. If these buyers are strong enough, they need to keep pushing this price up, all the way up. Okay, as we can see, they already like touching the all-time high, which is the weekly liquidity, which is quite early. If this market wanted to go higher, I will expect this market to at least we chase deeper down to this level here before going up. However, let's see what we have in the 4 hour, why this market is going higher here. So we have an unfair pricing gap here, which is your normal fair value gap. For the one who follows me, you know that I prefer to call them unfair pricing gap, because the market is all about fairness. The market is all about balance. The market is all about like making price like distribute price for each side in a fair way. So since if the market is fair, so I prefer to call and then when you have a space between the market, so this is not, so which means price is not well distributed. So I prefer to call them this like this unfair pricing gap. Okay, this is an unfair pricing gap, because price wasn't, so the market didn't fairly price didn't price fairly, or in a kind of uh in a kind of equal distribution between sellers and buyers. So in that case, so price will always come down to fill this hole. Price will always fill every single hole in the market, because these holes are not supposed to exist. So that's why I prefer to call them unfair pricing gap, okay, or UPG. Okay, so for me, it's easier to understand if I call them unfair pricing gap. All right. So as you can see, that like as I always say, wait for the 10 p.m. 10 p.m. can H4 candle to close before you think about taking any trade in the London session. For example, as we can see, based on the Max Maserati model bias, here we will have a bullish affinity plus. Okay, this is a bullish affinity plus, because the market took the low, okay, but closed above with bullish pressure. From here to here we have bullish pressure. Okay, and then as we can see, this market tap in, and then this market leave another unfair pricing gap. So leave unfilled portion. So I will name the unfilled portion, because for me the unfilled portion are a very, very important point, which means that the market highly likely come back to this level. Okay, this is the way I see the unfilled portion. Okay, when the market tap inside of unfair pricing gap, okay, and then leave the portion unfilled, So the market highly likely will come back to this level to fill it out. Okay. And then as we can see down here, we have another unfair pricing gap. Okay. So let's mark it out on the 4-hour. Let's mark it out. Okay. This is our unfair pricing gap, 4-hour. All right. And then as we can see here, price is quite strong at this level here. Okay. Price is quite strong. Here price was going like, here price was like struggling at this level, and then price went up here, and then price created market stick to change with bullish body close. So on the 4-hour, this is where we have our MMM external block CDL. So as you can see, I took a nice trade here on Wednesday. On Wednesday, I took a nice trade here, and I think I made like 1 to 7 R. So exactly at this level. So if I were to hold this trade over a week, so I will have made on this trade, let's say if I were to hold it until today, I will have made 1 to 67 based on the Max Maserati model. Okay. So I think I published this trade with you. I post this trade with you guys. This trade I took. It was on Wednesday, if I can recall. And then as we can see here, so price is quite bullish. And then once the 10 p.m. candle close on New York time, okay, and then we have a bullish affinity plus, okay, and then once we measure the bear pressure and the bulls pressure, we see that the buyers are strong. And then, so normally, based on the Max Maserati model, you'll be waiting for price to retrace inside and then push up. As we can see, this will have been our target. And then price goes all the way up. And then we'll be in this trade in the morning. We'll be like smiling. Yeah. So anyway, so, and as we can see on the 4-hour, the market created market stick to change at this level. So on the 4-hour, this is our MMM external block here. Okay, 4-hour, this is our MM external block here. Why it is our MM external block? Because bullish market stick to change to this level here. All right, so let's call it this a market stick to MM external block CDL on the 4-hour. Okay, CDL on the 4-hour. Okay, let's mark this H4. Okay, so this market stick this is where we have our market stick to change. We have PO4 bullish. So the market closed below above this high with a bullish body close, and then market we trace back. Okay, we can check the see, and then based on, for example, now I'm telling my students how exactly to take a trade even the market is on premium. This is the perfect case scenario where to take a trade even the market is premium. Okay, so yeah, and then we have a market switch to change here, and then here the market create in my MMM block, another MMM block, but this MMM block is the MMM internal block long. This an MMM internal block long. Okay, this MMM internal block long on the 4-hour H4. All right, so basically now, so what we're waiting now, so we already missed this opportunity to take this trade, and as I'm checking here, you see it's 5 minutes left for the 4-hour candle to close, but the market is not taking this high. Do you know why? Because I think the next 4-hour candle will open, push up, okay, took this high, took both liquidity, because we have sellers on both on this level here. We have sellers. So on top of every single candle, we have sellers. So plus the sellers. Okay, so the sellers, and then on top of here, once this candle close here, we'll have sellers here. If we have sellers in the market close, bullish body close, so the buyers will attack this level because there's liquidity here. So let's wait for this candle to close, 4-hour candle to close, before we think about taking any trades. And I think once this candle close, okay, if it close around here, next candle will come with strength and with strength to take this high, boom, and then highly likely push up and then push down. Okay, Let's see. Let's see what will happen. Okay, so this is the 1 hour. We already did our high time frame analysis. So, and then we can check. We could check the what is called the volume. But now nowadays I don't really use the volume. So I use this indicator, the MMPD, to see the volume. Okay, to check where is the volume. Okay, so for example, this is my HVC on the 1 hour. Okay, so I'll be marking this as my HVC. Okay, once this HVC is violated, okay, so once this HVC, this is my HVC bullish, okay, once it's violated, and if price, the candle that violated this, that violated this, the low of the HVC, this is like H1, okay, the candle that violated the low of the HVC, it will be my HVC1. Okay, so I'll be, because below every single HVC there's a lot of liquidity, and then price will be looking to refuel, okay, to push up. Okay, so we have a refuel here. See, price hasn't closed below this HVC. It's, so this become my HVC1, which means, so the candle that first touched the highest volume candle I have. Okay, so if market price is not supposed to come to this level and close below it, which is 58.4500. So if price were to violate this level, okay, and then so we expecting highly price to keep pushing down, and if price were to violate and close below this level here, so we highly expect price to keep pushing down. Okay, so what I expect for this week, I expect price maybe today on Monday to take this high. And if the buyers are strong enough, like they are showing it, they need to keep pushing price up. And if they can't for today, so we highly expect after today closing, depends on how the candle. If the candle close bullish body close for today, we expecting price to keep pushing up. If the candle close bearish body close, or bearish affinity plus, so we expect this market to keep pushing down. So which means the buyers are ready to take profit, and the sellers are ready to get inside of the market to take advantage of 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 the market, right? To take advantage of the selling, okay, of the dip. Okay, so it's just 1 minute 57. So what I know nowadays, so what I do, I just stay on the 15 minutes candle until I find something on the 15 minutes candle that telling me price will go higher. Or I have my for example here, if I were to look for a trade here, okay, I see, I'll be checking here. Oh, here I have this price went all the way up here. So this will be my MMM external block all the way down here. So this is the trade I took the other day this is on Friday. Trade I took on Friday. This is the trade I took on Wednesday. Where's Wednesday? All the way down here. So I took this trade on Wednesday. On Wednesday here, this is the trade I took on Wednesday. I took the trade from all the way down here, and then I took this trade here on I think I took this trade on. That was a very beautiful trade here before the news on. It was before the news on Thursday. Okay, before the news on Thursday, I took this very beautiful trade here. Here, you can't really see it because it's what the hours on the 1 minute, but yeah. Okay, I can open. Maybe I should go to the 1 minute. Let me just replay it. Come back. Where is it? Okay. Oh, let's go. Let's go and check what price is doing, guys. Okay. So yeah. So I think I took this trade here on Wednesday. So, but this was a quite a trade that I need to explain you guys how to take this kind of trades. So yeah, this is the trade I took. It was on the 1 minute. See, market 60 change in the 1 minute. Okay, yeah, I was expecting price to keep pushing up, and as you can see, and then we had Asia high where I wasn't taken yet, and then the MSC was bullish. The MVM price was moving in on top of the market volatility momentum indicator that I created. This is a new indicator that tell me, for example, how and when to take trade on premium. See, all the conditions are met. Market city change, a signal block on 1 minute. Market went all the on top of the MVM, which is the market volatility momentum. Okay, and then we have another market city change on with this candle here, and then we have a PO for bullish here, and then I was on top of the MVM, boom, and then I entered my trade. And if you're on 15 seconds, it's even nicer. All right, so let's go back to the chart and see what the market is doing. Okay, see, as I was saying, okay, as I was saying, I say if this candle, okay, if this candle close, when this 4 hour close, okay, I was saying when this 4 hour close, if it doesn't touch the candle, if it close down, so next candle, what next candle will do, it will go with strength, with power to take this high and push down. See, this is exactly what I say. Exactly, this is how the MMM system work, the Max Maserati model work. See, let me take this out. Right. So let me take the MVM out as well. Let me take this out. See, the market went exactly as I predicted. Boom, on top to the high. See. So the candle closed bullish, but it closed, but it didn't touch the newest ATH or our weekly target where we have a lot of sellers. And then, as I said, I was expecting if the 1 hour close bullish body close. So I expecting the next candle when it opened. For example, it opened this is where it opened 59. You see the candle, it opened at 6, exactly at 6. See the strength, you see the strength. I said this candle will go up with strength and took this high. Boom, exactly what happened with them. Boom, it took the high. So now let's see. So since we have equal high here, and then this candle is a close inside with bearish affinity. So we highly likely expect this price to go up again to this high. Let's see if the buyers are strong enough, they will keep pushing price higher. If they are not strong enough, you will see price start moving lower. And then if we can see the MMPD, we are in premium, which means we highly expect price to push down. And now we can see here, you see, the bank, the institution, the big players start getting in. See, this purple candle, they start getting in. Purple candle start getting in. Purple candle, they start getting in. Okay, so I think at some point here, they might push this price up. Okay, then we might have a green candle here, which is like highest bullish volume candle again. We might have a highest bullish volume candle at a certain point, and then we might see this like kind of green candle like here, like this one, a green candle at some point with the highest bullish volume, and then price push down. Okay, so let's see what price will do. But this is quite interesting, very interesting. And then I think price will just take this double equal high. Okay, we will just take this equal high, push higher. Let me check the MVM. Where is it? See the MVM, you see the volatility band, the MVM volatility band. The price is inside of the volatility band, which means if the buyers were to push price higher up, I want to see the buyers stay on top of the bullish volatility band, which is this band. So when price is trending, price should stay above the volatility band on the MVM. Okay, so this indicator is a market volatility momentum. So it tells you, for example, if I think I explained it on a video. So if price were to keep pushing up, price needs to stay on top of the MVM, which is the market volatility band. So and then price needs to keep pushing up. But in that case, let's see what the market is doing. Okay, and you see. So, but on the 5 minutes, price is outside of the volatility band, which means the buyers are very, very strong. See, the buyers are very strong in 5 minutes. 15 minutes, are we outside of the volatility band? Yes, so which means the buyers are strong. So we might highly likely see price keep pushing up. because the buyers are quite strong in this market. So these MVM, the market volatility band, will tell you exactly if the buyers are stronger or the sellers are stronger, right? You see, price is staying outside of the MVM, outside of the volatility band. So which means we highly likely expect price to push up a little bit, okay? Okay, more buyers coming in, okay? More buyers will come in. Okay, so let's see how this 15 minutes will close. Or if price can't push up, it needs at least needs to close below the volatility band, and we highly likely see a consolidation here, and then price cross below, okay, below the signal line, okay, and then price cross push and keep pushing lower. But since what we are seeing here, sellers, if the sellers cannot take over to push this market to close below the volatility line, so we highly likely this buyers keep pushing price up. Okay, I think the buyers highly likely keep pushing price up. And but as we can see in the 1 hour as well, you see price is still hasn't really crossed on top of the volatility line, which means on remember the higher time frame are the king. Okay, higher time frame are king. Okay, so let's analyze the volatility band. So we see the volatility band, bullish volatility band. If price is trending, so we want to see this candle push up and stay above the volatility band. Okay, 4 hours or we are already outside of the volatility band in 4 hours, which means this price highly likely keep pushing up. Okay, we highly likely keep seeing these buyers keep buying. Okay, so 4 hour tell us everything, and then we like to see that this candle now close bullish body close and stay above the bullish volatility line. Right. So okay, guys. So if you have any questions, guys, so this is the time for you to ask the question. So I'm leaving soon, and then I will try to do a nice session every day if I can, and yeah. I hope this was helpful for you guys. As we were saying, the buyers are quite strong in the market because of the volatility band. We could see that. See, and in the 1 minute, look at the market in the 1 minute. See, the 1 minute the market buyers the bullish body close outside of the volatility band, and then we want to see this price keep pushing up. We don't want to see this price close below this line. Okay, now we are failing here. Anyway, it's 1 minute. At least we need to see the 15 minutes. How this 15 minutes will close? Will it close bullish body close, bearish body close? What will be the reaction from the first candle? Because if price, for example, this is a 4 hour candle, guys. Price didn't even retrace inside, which means the buyers are very strong. If the buyers are very strong, okay, which means we need to see more buying power, more buyers coming in, fresh buyers coming in, and fresh buyers coming in will be defined by this on the MMPD will be defined by this candle. See, and then this highest volume candle on the 4 hour. So these are our HVC. You see, in this candle, the market cannot come down here. We don't want the market to come down to this level. Okay, this is our HVC bearish, bullish here. So we don't want to see the market coming. Even the market come down here, but we want to see it pushing up. Sorry. Okay. Since the market already took the high of this candle, it needs to keep going up. Okay. There's no coming back because once the market took the high, it needs to keep going up. It needs to keep pushing up. So now we have new all-time high. Okay. So I think that's all for today. So please take care and remember, like, trade safe and always focus on your strategy. Don't modify it, and don't twitch it, and then just follow the rules. If you're trading the MMM, just make sure that you always wait for a MMM external block CDL if you're taking a long, and then wait for price to retrace inside of discount on the MMPD to get an MMM internal block, and you take your trade. It's the same for bearish as well. So you wait for an MMM external block short CDS, and then after that an MMM internal block short, okay, on premium. Okay, so thank you very much, guys. If you want anything, you can just have the links down there. You can just go and follow me on Twitter, follow me on Discord. My Discord is completely free, and you can go on Warp if you want to know more. If you want to get access to the indicator, you can go on Warp and get access to the indicator. And I think I have if I'm not misleading, on Warp I have a I have an offer now, which is MMM 2434 with some discount, and so I will send it to you guys on Discord. Yeah. So yeah, so that's all for today. So thank you very much for being here, and see you soon. Okay. Yeah. So the HVC, you can see the HVC on the MMPD. Just for example, so when you have this candle, for example here, this is an HVC. Okay, this green candle down here, this is an HVC bullish. For example, see this is HVC bullish, right? So we don't want to see price coming down to this level. Even price, you see, price price came, but we don't want price to close below this level. You can touch it, but once you see this HVC on the MMPD, you need to be careful, because price at any time, any moment, price might start retracing. And you can see here, price come. This is the first HVC we have, and then price come to this level, okay, come, and then see price touch it and push up, okay, push up, okay. This is our HVC. For example, if we were to take a trade, this will be our MMM external block, because we have market to change here, and then price come and touch the HVC, fill out the unfair pricing gap here. Let me take the MVM out, fill out the unfair pricing gap, right, and then come into the HVC, didn't close below it. You see the reaction from this level here. Okay, this is our HVC bullish. You see the reaction from it. Okay, so this HVC bullish on M1. Okay, you see the reaction. Okay, price just react, and then price just keep pushing up, keep pushing up. Okay, see, that was the trade for today. This would have been a very nice trade, but at this time most people are sleeping. Yeah, see, based on the HVC. So for example, you will likely have your MMM. This is not MMM block. We didn't have an MMM block here. Okay, let's see. So the nicest MMM block is here. Quick market structure change. So it will be highly likely here. This will be your MMM external block on the 1 minute. Okay. And then when the 10 p.m. candle close, this is highly likely where you'll have your trade. Okay, boom. And then this is the MM external block, CDL. And then this is M1. This is not daily MM block, CDL on M1. And then this will be your internal block. Okay. And if you were to follow the rules with the Max Maserati model, and then this is your internal block, internal block long, block on in 1 minute, and then price is completely in discount. Price come inside of this unfair pricing gap. Price touch the HVC bullish on M1, respected it, give you a bullish body close, market in this is in discount, bullish body close. You have MM external block, this is your MM internal block long, and then what do? You just half of this candle here, you place your trade, your stop loss here, your stop loss here, okay, and then you target 1 to 2. You target your 1 to 2, okay, 1 2 3 4 minutes, you're done for the day. Okay, 4 minutes, you are done for the day. And then if you wanted to maybe target the ATH, now it would have been like 1 to 5. Yeah, 1 to 5. Okay, And as you can see, the market is keep going up. You can just keep like you could keep using the MVM to see if price still stay above the market volatility band bullish, and then you just keep trailing. You put your stop loss here at the signal, and then keep price keep pushing upwards. So once you see price start closing inside and price not closing above of the volatility band, you just get out, or you put your stop loss below this. Since we expect market highly likely come back and we trace here, so our stop loss will be here at this level, and then we just keep, like trailing our stuff and make the maximum profit on this trade. So, but normally this technique I'm just teaching them to my students. So now I did a lot of improvement on the system. It is now it's amazing. I mean, not, it's much better, much better. So anyway, thank you very much. So and